Developers across the UK are going bankrupt. They've gone from the ground to the shells to the finished post-construction, and these homes are not selling. You might be asking, why are these homes not selling? I'm going to tell you exactly why. Now, everybody says, but Ruben, there's a housing shortage in the UK. And yes, you are correct, there is a housing shortage. So why aren't these homes selling? Well, there's multiple reasons. Developers are building the wrong thing in the wrong place. Affordability is at an all-time low. House prices are over 10 times average earnings. So that just means that people just can't actually afford to buy. Thirdly, behind all of that, interest rates are some of the highest they've been in recent years, meaning the price of the house price plus a 5% mortgage is just unattainable. We're back at Archers Road and we have already rented 3 of our rooms prior to even finishing the construction. And you ask, Ruben, how have you managed to do that? Isn't demand down? Demand is not down. Developers just aren't building the right stock. We're outside the property. Let's go and check in and see exactly where we're at and how far off we are being ready to rent. So you might be wondering how we're already making money on this property when we're not even finished. Now come on through. As you can see, we're still not finished decorating. We've got protection all over everything, but we've already sold 3 rooms in this development. And that just proves that tenant demand is through the roof. Why is it through the roof? This is down to us providing a affordable product that meets what tenants want. Now let's run through the pros and cons of building to sell or building to refinance. Building to sell, you only have one type of person who's going to be buying your property, and that's normally families or professionals. If the market's not moving, if interest rates are up like they are currently now, these homes are sat there vacant, costing you money in development costs and bridging loans every single month. Whereas building to refinance and to rent out, we've already sold rooms straight away. We are not waiting to sell the property. We have to wait 8 weeks to remortgage before we get our capital back to plough on for the next deal. That means that we are already going into the next deal, already lined up in 12 weeks, so we keep recycling that money. Money is like water, it needs to flow, baby. Also, we get immediate cash flow, and cash flow in business is absolute king. Secondly, commercial valuations. We get a valuation determined on the net rent of the asset, and that figure is only going to go up with time, with rents creeping up 2-3% a year. Doesn't matter if houses aren't selling, our commercial valuation will continue to go up and up and up. The more houses that aren't affordable, the more demand there will be for rental products like this. Tax efficiency. When you sell as a small developer and you're doing it in a personal name or not in a limited company, you could be paying capital gains tax of up to 28%. However, if we are refinancing, putting us into debt, our paper balance is in the red, meaning we can have cash flow month on month and still service ourselves without taking a profit. Shrinking buyer demand. Everybody knows in England that a lot of the people who make money are leaving and we're having a millionaire exodus. So your top end of the sale market isn't moving, it's only towards the bottom end that is moving, and then still people are struggling with affordability. People want a lot for their money. Compared to on a refinance on a rental product, people are able to afford these rooms. Banks have a lot of money to lend out at the moment, so when you're just using the bank's money and using tenants to pay your mortgage, this is the strategy that is winning in 2026. Compared to the HMO, we're using the bank's money. There's no buyer actually to sell the product to, so we're not waiting for a lump sum. We use the bank's money to borrow against, and we use the tenant's money to pay down the debt and service the loan, leaving us with a nice chunky change of cash flow. Now, it's 2026. Apparently, especially in the Green Party's eyes, you're not allowed to make money off a rental property, and that landlords are the scum of the earth. Well, if landlords aren't providing properties, where are you all going to live? Tell me that. You're going to trust the government to build you properties? The government have not been able to keep up with their 300,000 homes a year since that they came out with that rule, but no government has ever managed to build the amount of homes that is needed for the housing demand. That's why developers like me are not ruining streets, not ruining family homes. We are fixing the housing crisis, and it's developers like us which really should be awarded by our hard work and with cash flow. Number 4, most importantly, speed. Some of these new build sites take up to 24 months to even get a spade in the ground due to all of the planning game, BATs, surveys, you name it. New build sites are a pain in the arse compared to buying a pre-existing asset like this, getting planning permission or using permitted development rights. Now, we're going to be in and out of this deal in 6 months. In business, speed is absolutely everything. We will have managed to potentially do 4 developments or more by the time that a new build site has even started. So when you finally sold your new build sites, you've then got to start looking for a brand new scheme, brand new planning, incredibly cash intensive doing new build ground up stuff compared to HMOs. And the BRR method, in which we do and which we teach, is it's speed, it's fast, it's efficient. Your cash is always moving. You're in and out of a deal in 6 months. You look back at the balance sheet over the last 24 months and you go, wow, we added £5 million to the portfolio. This is then retained in the portfolio. Asset prices are going up almost 10% every year. 10% on a £5 million portfolio is 500 grand in net asset gain. This is why you should always be retaining your stock. We're now at the finishing stages of the project where we've got panels on the wall, paint still going on in some areas, but up towards the top of the development, we are looking absolutely rosy in there. Front room is a bedroom with an ensuite. Downstairs, we now got a large communal room. And out here, we've now done this nice big open plan kitchen, dual cooking stations, dishwasher, sink, dual fridges, dual washing machine, tumble dryer. This is so that 6 people can live and function in this development together, which is where you make the money. Now, if we're nice, the painters might let us through upstairs. Bedroom number 2, another ensuite room. Bedroom 3, all of these are going to be going for about £750. Bedroom 4, right into the front, where we've got the tea station. This room is already rented out. This room got £850, so £850 per month. So lovely backdrop. We go for the 4-foot double beds so that people don't have dual occupancy and they haven't got their partner staying over. We've gone for doubles. People just end up abusing our lovely trust. Upstairs to now the real money spinners on this development, where we're through into the upstairs bedrooms. This room already rented, £850. Nice big ensuite in this one, and through into the master suite, another one which was rented out for £900 actually. This room, nice big kitchenette, tea station along here. Next things next, get the blinds up, get finished in here, all of the furniture built. D-Day, moving day is next Friday. We haven't got long to go. To do something like this, we've spent £175,000 on the development. We did have a little bit of overspend in some areas, and we've also gone for the highest premium, highest finish to date. You can do these projects for less, but we're trying to stand out in a very competitive market. Now, we borrowed the bank's money to do this. We actually used probably about 10% of our own money in this deal because we've got a good relationship with the lender. Now, to do these sorts of deals, you normally need about £100,000 to £150,000, depending on the size of the project. And you can also just use equity in your own portfolio if you already have it. Where do you get the money from at the end, you ask? You refinance and you borrow more money from the bank. We're going to refinance, probably get about £600,000, £450,000 on our account. That's going to pay back the lender £400,000 that they lent us to do this project, leaving us with our 50 grand back in our back pocket. This is how you make money in property, is using other people's money. The entire time you just try and use yourselves, your own money, you will run out and you will slow down your process. Leverage in property, you can use 3-to-1 leverage easy using a 25% deposit. But Ruben, what if it doesn't work? If it doesn't work and you go bankrupt, at least you can say you tried, and at least you didn't sit there at a desk crying about everybody else in their Lamborghinis and their Porsches, wishing it was you. In this game, it's down to whatever you put in, you can get out. You have to take risks in this life, and this is why we're risking it all every single day, continue growing and compounding this portfolio. Do I think the risk is worth the reward? 100%, otherwise I wouldn't be doing it. But the moment I don't think the risk is worth the reward, I will stop doing it. As I've said before, I'm going until the end of 2027 as hard as possible doing these developments. Once we're at that stage, we should probably have about £20,000 to £25,000 a month in net income. We will then hold out and see where we're at then. Are you looking to get into HMOs or into property but don't know where to start? My name is Ruben Wincott, and we do a full hand-holding end-to-end service. Whether you're scared, whether you don't know where to do, whether you don't know the strategy you need to do, DM me on Instagram. I'm sure I can help you out. We do sourcing, project management, the build, where we can literally find you a property and hand you back the keys ready for it in 6 months, ready to rent out to tenants just like this. DM me on Instagram, Ruben Wincott. So there we have it. We're 1 week away from completion on our most difficult, most stressful, most problematic development to date. It was never going to be easy, but I didn't actually expect it to be this hard. Now, not all development is that hard, just problems with the neighbours, problems with planning, and this just really sharpened and hardened our skin on this. Now, the exact same conditions that are making the market very hard to sell, very hard for new build developers, is the exact market that is actually helping us as HMO developers. So we're 1 week away from completion. There'll be a full video tour, a full property tour, and a full final completion on this. Like I said, like, comment, subscribe. If you're looking to get into HMOs or you're looking to start developing, don't know where to start, drop me a message and we can have a call.